और गौरव कैसा है भाई?
I'm good, भैया. How are you?
बस बढ़िया बढ़िया। तो कैसी चल रही है पढ़ाई वढ़ाई तुम्हारी?
सब बढ़िया भैया एकदम.
चलो बढ़िया है। तो एक काम करते हैं। अभी अपने एक्सचेंजेस वगैरह के बारे में बता दिया, हिस्ट्री बता दी। अब देखो फाइनेंशियल मार्केट जो है, these financial markets are not limited to just stock exchanges. There are various other financial markets which are even bigger than these stock markets.
Okay.
Now you must be saying कि यार ऐसा तो कभी सुना नहीं है. We all we hear is about stock market, NSE, BSE. तो ये which other markets are there which are even more, I would say, you can say more liquid or maybe having more volumes than this year
Stock market.
stock markets. So I'll tell you about all those markets which are there, right? ठीक है, तो
Okay.
मैं अभी स्क्रीन शेयर करूंगा. I'll be sharing my screen with you and then we'll see. Okay.
Okay.
So ये तो आज का मेनली आज मैं तुम्हें बताऊंगा अबाउट अदर फाइनेंशियल मार्केट्स. ओके. Some other financial markets. So an interest rate derivative is a derivative where the underlying assets is the right to pay or receive a notional amount of money at a given interest rate. The interest rate derivative market is the largest derivative market in the world. The Bank for International Settlement estimates that the notional amount outstanding in June 2009 were US dollar 437 trillion. Can you imagine 437 trillion in back in 2009 for OTC interest rate contracts and US dollar 342 trillion for OTC interest rate swaps. According to the International Swap and Derivatives Association, 80% of the world's top 500 countries have April 2002 used interest rate derivatives to control their cash flows. This compares with 75% of foreign exchange options, 25% for commodity option and 10% for stock options. So just see the amount of trading that is taking place. Interest rate contracts. So ये बहुत बड़ा market, it's a huge market. So as compared to, but thing is, why is it not so much in news, or why not people are talking about it? But because these markets are not speculative in nature, and they do not show so much of movement actually. So people talk less
Okay.
about them, but in terms
Mm-hmm.
of dollars, they have huge participation. Just see the outstanding position, 437 trillion. 1 trillion is 1000 billion. So this is the amount of trade that is happening in these markets. So now we move on to next slide. So I won't be going into detail of all these. I won't be going into detail of all these because where I am trying to bring is basically stock trading. But still, you should have good knowledge about all these things. I have
Okay.
learned some of it in my MBA finance, and you must have maybe you must have had one chapter in your post graduation as well. But these are something that you should, being a you know, if you are planning to be a finance professional, you should have a fair idea of all these things.
Okay.
So there are there's these vanilla derivatives, interest rate swaps, interest rate caps or interest rate floors, interest rate swaption, bond option, forward rate agreement, interest rate futures, money market instrument, cross currency swap. So a few months back, I think 3-4 months back, there was one US bank, SVB Bank, Silicon Valley
Okay.
Bank.
Yes.
So that went bankrupt. That went
Yeah.
bust. So why it went bust? Because it was dealing in some kind of bonds, and because of high rate of interest, the bond prices plummeted. The bond prices which they have bought for long term expiration, they plummeted, and the bond prices came crashing down, and they were not able to pay back or something like that, and they defaulted
Yes.
like that. So their net worth came down. So this is also, this is not something that doesn't concern us. It is also that we recently saw, just in
Yes. I
I
have
think it was
heard that
March
news.
23. It was
Mm-hmm.
March 23. You must have heard about SVB Bank going bust, and then there were those, you know, ripple effect, those fears spreading in whole of banking institutions that okay, this bank is next, and Credit Suisse is going to bust next, and all these happens, and many such banks stocks went crashing down because of fear of them going bust or going bankrupt. So many things can happen because of interest rate changes. In recent past, we have seen US interest rate skyrocketing. They have been at multi-decade highs. So these things are very important for financial market, and understanding of these financial market derivatives and how bond prices priced in are very important. But in this class we won't be going into the details of how bonds are priced, but maybe I'll share you some good links, or maybe we'll have another session about
Okay.
discussing about bond prices. But that is mainly for our academic knowledge. For trading purposes, we might not need to understand how bonds are priced, but maybe later on in some session you can keep a note. I can explain you how bond prices are calculated, how changes in interest rate make changes in the prices of the bonds, and what do we mean by coupon rate and the yield rate, etc. All these concepts I can explain you in later chapters or on our later sessions. Okay, so the next intermediate level is quasi vanilla class of derivative, example for which are range accrual swaps, notes, bonds, in arrear swaps, constant maturity swaps, interest rate swap based upon floating interest rates. Bonding of the structure are the exotic interest rate derivatives. Now, really, I do not understand most of what I'm talking about, but this is the list I have curated for you, so that you have some, maybe you can impress some girls by talking all these terminologies.
Okay.
Power reserve, dual currency, not target redemption, not CMS, steepener, snowball, inverse floater, strip and collateralized market obligation, ratchet cap and floor, Bermudian swaption, cross currency swaptions. So swaptions, in fact. So maybe some interest rate swaps combined with options. So now come the foreign exchange market. Earlier we studied about interest rate derivatives. Now foreign exchange market. This is something. So recently we had a foreign travel, right?
Yes.
So how do we do it? We go to market and give our local currency and
We
get
get
our
foreign currency.
that target currency, whatever we want, or US dollar or whatever that we are looking for. So obviously somebody is exchanging it for us. That is retail exchange level. But obviously there is a market where big transaction happening, and how, let's say if you are a Indian big company, let's say you are a oil company and you want to buy oil tanker. Oil tanker is quoted around 200 million. But you are
Okay.
an Indian company. You do not have 200 million US dollars in your bank. What you have is Indian rupees. You might be having 1600, 1800 crore Indian rupees. The payment is spread over, let's say, 6 months period. It may not be 200 million in one go. It might be that you might be paying 10-20% in one go, and then when the vessel arrives, you pay rest of the money over a period or something like that. You might be getting finance for it and all this. So this 200 million transaction can be a very complex transaction, or it could be all the simple transaction but spread over a longer period of time for 6 months period. For that you have rupee backup, but at the same time we know that we always see this rupee going strong against dollar, rupee going weak against dollar. Earlier 1 rupee $1 used to cost us 50 rupees, say 40 rupees way back 25 years back, and now it is worth about 82
85.
83 rupees, devaluing fast. All these things we hear about it. How these prices are decided? This is because of foreign exchange market. So we do
Okay.
have foreign currency markets here in India. We have them liquid contracts on NSE. Foreign currency contracts. We have liquid contracts on main volumes are coming in USD INR. So USD is
Okay.
basically still the world currency, and any price pegged and we deal in USD INR contracts. That means USD versus INR prices keeps on fluctuating based on demand and supply factors. So the foreign exchange market is a worldwide decentralized over-the-counter financial market for the trading of currency. Financial centers around the world function as anchors of trading between a wide range of different types of buyers and sellers around the clock, with the exception of weekends. The purpose of foreign exchange market, or popularly called Forex, and we will be calling it Forex going ahead, is to assist international trade and investment. The foreign exchange market allows businesses to convert one currency to another foreign currency. So the main purpose is to convert. We might
Okay.
need it for our vacation, for our travel, for import, export, for buying some capital goods, for whatever international transaction that are happening between two entities using different kind of currency. The common factor will be some kind of foreign exchange. Like India is importing a lot of crude from Russia, so they might pay them in dollars or in rubles or in INRs. And for whatever the payment system, there has to be some conversion method,
Yes.
because if even Russian is accepting rupee, then he is visualizing it in ruble terms. How much rubles
Okay.
am I getting? So he might be using some kind of conversion. Let's say we are paying dollars, so we are concerned about how much rupee I am paying for the dollar amount paid. Say Indian oil company is importing at $60, so we are more concerned with the rupee expense, that because ultimately he is going to sell it in rupee terms here.
Yes.
So we really need a ready foreign exchange price. In a typical foreign exchange transaction, a party purchases a quantity of one currency by paying a quantity in another currency. That's what I'm talking about. The modern foreign exchange market started forming during the 1970s when countries gradually switched to floating exchange rates from the previous exchange rate regime, which remained fixed as per the Bretton Woods system. So earlier, what used to happen? The exchange rate used to be fixed. They were not dependent on the demand and supply. They were
Okay.
just fixed. Like still there are some currencies. There are still some currencies which are pegged against dollar. So their ratio with foreign currencies remain same. Like for example, I tell you about, I think it's UAE dirham. They have it, their currency pegged against US dollar. I think it is in the ratio of 3.67. That means one US dollar is equivalent to 3.67 UAE dirhams.
Dirham.
So
Okay.
that is also an example of fixed currency, fixed currency model.
But what is
So
current scenario here? How it's calculated by demand and supply?
not for all currencies. For INR, let's say Indian rupees, it is based on demand and supply. We have a
Okay.
flourishing. See, there are two markets. One, the derivatives market that we are talking on, NSE and BSE. That
Yes.
is one part of the market, but most part of foreign exchange transaction are happening through banking system.
Okay.
So in that example where let's say I'm buying a vessel worth $200 million. I'm a shipping company based in India, and I am buying some 200 million worth of vessel from abroad, and I have to, let's say, pay in US dollar. Let's say, then I'll go to my bank. Then I'll go to my bank and tell my bank some requirement that okay, I'm needing this much amount of US dollars over a period. Then I'll probably design a product with them where they will provide me a foreign currency over a period, and they will, on my behalf bank will make some on my behalf bank will make some what do you call uh, their treasury department will make some contracts or make some preparation, so that they can give me some kind of rate assurance, or they can ensure the supply of dollars for my purpose. So this kind of transaction also, again, foreign exchange transaction, which is happening through bank, which is not happening on exchange floor, which is happening through bank. So that is also part of forex market as well, and that market is very huge, because just imagine the amount of foreign transaction that India is doing, the amount of import exports that is going into hundreds of billions of dollars. So all this is part of foreign exchange market. In a typical foreign exchange transaction, okay, we covered this. So you kindly read it for me, please. Gaurav, you read
According
it for
to
me, please.
yeah, according to the Bank for International Settlements, average daily turnover in global foreign exchange market is estimated at point $3.98 trillion as of April
That's a 4
2007.
trillion.
Yeah.
That is 4 trillion way back in 2007.
Okay. Trading
I
in
believe
the
it must be somewhere near $10 trillion now. It must be somewhere
okay.
near $10 trillion, at least, I believe.
Mhm. Trading in the world's main financial markets accounted for $3.21 trillion of this. This approximately $3.21 trillion in main foreign exchange market turnover was broken down as follows. Should I read this pointer also?
So basically, it says that all these transactions are of different kinds: spot, forwards, foreign exchange swaps, and maybe 120 billion is estimated gaps in reporting, etc. So it's a huge market, much the transaction volumes are actually far bigger than what we see in equity markets. But then again, they are not favorites when it comes to speculative transactions, just like we see it in financial derivatives that we discussed last time. I
Bhaiya,
mean, those. Yeah, go ahead.
do you ever trade in currency market, or is it recommendable for me, for newbies, to trade in currency market?
Yeah, actually, I did a lot of currency trading. I think that was year 2013 and 14. I did it for around 2 years, where I used to trade in which exchange was it? I think it was NSE or maybe MCX. I can't recall exactly. So there were four contracts that were liquid: USD INR, USD GBP, USD Euro, Euro INR, and JPY INR or Japanese Yen INR.
Okay.
So these are four major currencies, and our INR was trading against those currencies, for those four currencies. So I did it for 2 years. I made some money as well, but the amount of money for the effort that I was putting in was not so much. The amount of returns were minuscule. So I decided to just focus on equity and commodities. So I left out currencies. So since
Okay.
then I haven't. It's been like how much? It is about 8-9 years. I haven't touched the currency. No. I did some currencies few months back, just a little bit, but as such, I haven't done much of currency trading in last 8-9 years. So this is how it is about currency trading. So for you as well, maybe at the right time I'll guide you, but for the timing, just have the basic knowledge. Maybe watch some screen, but not prepare yourself to get into that currency trading as of now.
Okay.
Maybe some time ahead, maybe year ahead, we will think about it. Okay.
Okay.
So now we have covered in interest rate derivatives, foreign currency, and now the third part is bond market. Kindly read it for me.
The bond market, also known as the debt, credit, or fixed income market, is a financial market where participants buy and sell debt securities, usually in the form of bonds. As of 2009, the size of the worldwide bond market is an estimated $82.2 trillion, of which the size of outstanding US bond market debt was $31.2 trillion according to BIS. Nearly all of the $822 billion average daily trading volume in the US bond market takes place between brokers, dealers, and large institutions in a decentralized over the counter market. However, a small number of bonds, primarily corporate, are listed on exchanges.
Okay, I'll take a pause. This word is coming OTC market.
Yes.
OTC market, and then a small number of bonds, primarily corporate, are listed on exchanges. So whatever that we are trading on listed on exchanges is not OTC. OTC is between, just like I talk, when the foreign currency transaction are taking place between one bank to another.
Okay.
That is OTC market, where two people are trading over the counter. XYZ bank and ABC bank, two are dealing in currencies. One bank is having an excess of US dollar supply, and one is having deficit of US dollar supply. So in between they transact with each other. That is OTC market, where two people are transacting. Just like we go to market and buy something, we pay that person 10,000 rupees and buy some goods. That is OTC market. That is not listed over the exchange. So most of these bond market transactions are taking place OTC. Maybe government is selling to corporates, or corporates are selling to some other banks or something like that. So that is happening between two entities or a group of entities on one side or the other, but they are not listed on exchange platforms. So such markets are called OTC market basically. References to bond market usually refer to the government bond market because of its size, liquidity, lack of credit risk, and therefore sensitivity of interest rate. Because of the inverse relationship between bond valuation and interest rates, the bond market is often used to indicate changes in interest rate or the shape of the yield curve. Types of bond market. The Securities Industry and Financial Market Association classifies the bond markets, broader bond markets, into 5 specific bond market. Corporate bond basically are the bonds which are issued by your companies. Like let's say
Okay.
Tata Steel. Tata Steel wants to raise capital of 10,000 crores. So they might need it for 3 years. They are setting up a new plant. They want to raise capital of 10,000 crores. So they will issue corporate bonds. One is they can raise credit through banks, but in this
Okay.
case they want to raise. They will issue corporate bonds. Corporate bonds, like say they can say, okay, minimum ticket size is 50 lakhs, and we will say this amount of interest for next 3 years. Your money will be logged in for 3 years, and after passage of 3 years, we will pay you 50 lakhs with interest. So anybody who trusts that, okay, Tata Steel is a good company, it's not going to go bankrupt in 3 years, and satisfied with the interest rate provided, that person, and he has that amount, that much amount of investable money, then that person can choose to invest in those bonds. So those bonds which were, let's say, issued by Tata Steel for capital raising or for their fund needs, that will be called corporate bonds. Now there is government and agencies. So government and its agency, like there are some bonds which are issued by RBI. They are typical government bonds, but there are
Okay.
also some bonds which are backed by Government of India, like some bonds which are issued by Rural Electrification Corporation, PFC. They are again AAA rated bonds because they are guaranteed by Government of India. Even if this corporation fails, it is as good as that we are buying these bonds from Reserve Bank of India, because Government of India is
Responsible for it.
uh, standing guarantee to those. Yeah, responsible,
Okay.
you can say, standing guarantee to the repayment of those bonds. So they are fully safe. Then there are municipal bonds. Municipal bonds are issued by the state authorities or some municipal level authorities. So municipal bodies are again like uh, uh, these quasi state bodies. So they can also bonds for their capital raising purposes. Mortgage backed, asset backed, and collateralized debt obligation. So that is like more like something against property, just like something we read about loan against property, or some mortgage against something like this. That you must have heard something like that a country pledges 100 tons or 100 tons of gold to raise capital and all. So these kind of bonds are mortgage based or backed or asset backed. So this also
Okay.
happens in international market, where somebody, some country which is facing some financial crisis, they put their gold with some international monetary organization, and then they get the liquid money out of it. So this is also uh, one form of bonds. And then there is bonds for funding. So if I want to raise money for some particular purpose, I can issue bonds and get a funding out of it. So these are basically broadly different kind of bond market that exists. So this is about it, about different financial market. I'll send you this by email, and you can have a reread about it. And also, for all those terms, etc., if you want more knowledge, then you can always refer to internet and get more knowledge of it. If you are stuck somewhere, you can get back to me, and we'll have greater discussion on that. So
I have one question, Bhaiya.
yeah,
Uh,
tell me.
as I'm following the share market news now today, so I have seen that FII and DII daily they show the data of FII and DII, that foreign
Okay.
institutional investors. What are this?
Foreign institutional investor and domestic institutional
Yes, they
investors.
daily show the data of
So
that FII and DII.
yeah. That data is regularly published, and I think it is published on daily basis. And then there is first data that we publish is, I think, what it is called, it's national or something like that. And then next day it is exact figures are coming out and something like that. So we first, for that we first need to know what do we mean by FIs, DIs, what are different kind of participants that are there in the market, the retail participation, the proprietary trading, and then who are these financial institutional investors, and who are these domestic institutional investors, and why their trading activities separately reported. So that is again altogether different chapter in itself.
Okay,
So in future interactions we will discuss about that. But for the time being, you keep a note of it. We'll surely discuss about this
okay, Bhaiya,
whole
sure.
thing about the FIIDIs and what are rules, regulation governing them, etc. So we'll come to that someday.
Okay, Bhaiya.
Okay.
Okay, Bhaiya.
So shall we close it here for today?
Yes, Bhaiya.
Okay, buddy. Take care. Enjoy your weekend.
Yeah.
Have a great
Bye,
day
Bhaiya.
ahead. We'll see you.
Okay. Bye,
Bye.
Bhaiya.
Bye. Take care.